Slight reprieve for motorists as fuel prices go down for a third consecutive month. The department says the reduction in prices of fuel is as a result of the stronger rand-dollar exchange rate during the period under review. The Department of Mineral and Petroleum Resources has announced that the price of a litre of paraffin will go down by 29 cents, while liquefied petroleum gas will decrease by 14 cents per kilogram.
Both grades of petrol will decrease by 15 cents a litre. Diesel will decrease by 28 and 17 cents a litre. Illuminating paraffin at retail level will decrease by 29 cents per litre. And maximum retail price of LP gas will decrease by 14 cents per kilogram. The reason for these adjustments are the stronger rand against US dollar during the period under review.
The lower fuel prices will contribute to the slowing trajectory of consumer inflation, boosting chances of an interest rate cut later in the year.
Unfortunately, of course, the magnitude of that decline at 15 cents per litre for petrol and 28 cents per litre for diesel is far, far less than the 1 rand per litre thereabouts cuts that we had in fuel prices in June and July. So the impact in terms of reducing inflation is far, far milder than what was experienced last month and the month before. Even so, I think that other things equal, one is looking at inflation dropping below 5% in the next few months. And that is why there are still hopes for at least some interest rate relief. The problem is now this latest weakening of the rand may scupper the hopes that we would get maybe 2 cuts or even 3 cuts before the end of the year. One is now tempted to suggest that we'll only have a mild cut of 0.25% in November or so.
Meanwhile, the price of Brent crude oil nosedived to around $75 per barrel on concerns of a recession in the United States.
Suddenly, there's a panic that, in fact, we are seeing a big slowdown, that wage inflation is going to be a thing of the past, that inflation around the world might fall more steeply than we thought it would, and that, therefore, interest rates need to be cut quite sharply and quite soon in a manner that was not being anticipated a few weeks ago. The combination of all that, together with a whole lot of earnings of high-tech companies that disappointed the markets, resulted in a big sell-off in equity markets and a flight to bonds whose yields tumbled on expectations of lower interest rates. And simultaneously, the prospect of much lower economic growth globally than anticipated resulted in a sharp decline in oil prices.
Jamin says the benefits that may have come from the fall in the oil price are being neutralized by the weak rand-dollar exchange rate. Gloria Stefakomosi, SABC News, Johannesburg.